Hello traders, Gary Wagner here, approximately 1:20 in Honolulu, 5:20 in New York. It is Wednesday, 18th day of November, 2020, and this is the Daily Report for Gold and Silver. On today's show, you will notice that we have two embedded videos. The first one is our typical show, and the second one is an interview that was done approximately 3 hours ago with Kitco News' anchorman Dave Lynn. Please enjoy both shows. As you know, over the last couple of weeks, we have been talking about an observation as the 50-day moving average began to decline and move closer and closer to the 100-day moving average, which meant that there was a potential that we would get a chart pattern labeled as a death cross. That occurred yesterday. And today we do have gold trading lower, down $14.10, and it currently fixed at $1,871, and that of course is basis the most active December contract. If you looked at the opening letter, we speak about the three phases of this chart pattern type, and we have completed the first two. And of course it is that third phase that is the most important, because that is when we see price decline continuing and actually going into a bear market scenario. We certainly have not had enough time since the cross to determine whether or not we will see that occur. But at least for now, we have seen phase one and phase two completed of the death cross. When we look at spot gold, that is trading at $1872.20, up about 4 cents, or we'll put that in the unchanged column. And we are seeing that inversion, meaning spot pricing being about $1 higher than December futures, which tells me that there is a great demand for physical gold. Traders silver also closed sharply lower, losing approximately 1% on the day. It is currently at 24.39.5 cents, putting it down approximately 26 cents. The other thing that is noteworthy is where we identified the death cross in gold. We couldn't say that about silver. It does appear as though it could in fact cross. You can see that they have definitely moved closer and closer together when we look at this daily chart on the lower right-hand side of the screen. And traders, all of that occurred with a very neutral dollar. I once again will put that in the unchanged column at 92.41. up 0.01%. We are looking at an extremely long-term chart of gold, which is going back to the end of 2018. We have the 50-day moving average in yellow, light blue is the 100, and red is the 200. The one thing that we talked about, but we didn't include the 200-day yesterday, was that point in time at the beginning of 2020 when we actually had the 50-day moving average cross above the 100-day. Now, while the 200-day, which is the extremely long-term moving average, has absolutely remained in that bullish formation, it wasn't until the identification of this contraction and this death cross just yesterday that we were able to see we have the first signs of a potential shift from an overall bullish market to a bear market. But as I said, that third phase, in other words, a continuation of lower pricing, is what is critical when determining the validity of this pattern. We also spoke about other technical indicators that market technicians use in conjunction with a death cross, typically the MACD, a momentum indicator, as well as volume. We are looking at the MACD, and that, of course, is on the bottom of the screen. You can see that it absolutely went to a overbought scenario back in August when we hit these all-time record highs. We can absolutely see that this market has traded down to where it went from overbought to oversold. It has moved up a bit, but it is right at a midline, so it's not giving us a strong indication that this is going to be a long-term market sell-off. Lastly, we spoke about the fact that volume is also taken into the mix when looking to confirm the death cross pattern itself. And we can't say that the volume has spiked tremendously over the last couple of days. We did get this one spike a few days ago. This, of course, is a daily chart, but the recent volume has kind of moved down. But we also have to remember that this is going off of the December futures contract. That is coming to first notice day fairly soon. And so there are a lot of traders that are either exiting the trade or rolling into the February contract, and that of course will be the next most active contract. Lastly, in terms of gold, I do want to address various support and resistance levels that we currently see on a technical basis. I still maintain that the price point of approximately 1850 is an extremely strong support level on a technical basis. We can see certain areas in which it served very eloquently as support. I still see resistance between 1920, which was the former record top, and approximately 1945, which is the 38% Fibonacci retracement level. So those are the levels in terms of broad support and broad resistance. Traders, lastly, I do want to take a quick look at silver. As we spoke about when we went through pricing, we definitely see a contraction in terms of where the 50-day and 100-day moving averages are. They certainly have not crossed, but we can, without a question, see that the 50-day has been slowly moving closer into the 100-day moving average. Again, in terms of support, we look at that at approximately $23. That is the 38% Fibonacci retracement, and we have resistance at $25.75, the 23% Fib retracement level. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.